Good afternoon, everybody. We're going to go over our Forex trades for today, Wednesday, August 20th. Pretty slow out there, pretty choppy action as to be expected. We do have the Fed, the FOMC meeting in minutes coming out at 2 p.m. Eastern Standard Time on about 2 hours from now this afternoon. So not a whole lot of action this morning heading into that, obviously. We will be watching to see what those meeting minutes unveil from the last Fed meeting. They usually move markets, so if you're in a position, you better be aware and be careful. We did have one trade here, was U.S. dollar Japanese yen, which we were short 102.733. Never went in our favor, so consequently, we never put on got a full position on. As you know, we like to piece our way in, either a third and a third or a half and a half, whatever, at least a couple of pieces, but only when they're going your way. So you want to add to the position on a profitable side. You don't want to average into a position when it's going against you. This never went in our favor, so it just went against us the whole way. I know the algorithm was saying an out was 103.11 or 0.12, somewhere around there. We looked at the figure. You know how we feel about the figure. So once it broke the figure by a few pips, it was our signal to cover. So we lost 29.8 pips, but adjusted for size, it comes out to 7.5 pips. So not a big deal at all. Absolutely not a big deal at all. So we'll take it. We'll move on. We didn't get beat up bad, although it looks like you get beat up bad. But when you're piecing in and you don't get all your pieces off, and that's part of the strategy. That's why you can be successful at it. If we were shorting this, and if it had started to work in our favor, and we added to it one or two times, 5, 8, 10 pips down the road in profitability, and it keeps going, you're going to do very well with it. Whether you make 10, 15, 20, 50 pips, 100 pips, whatever, the whole idea is that you're limiting your downside while taking advantage of your upside. If the second and third pieces, or the second half that you add, whatever you're doing, you don't risk as much as the first part, whether it's the first third or the first half. So what we like to do is we like to add either add by thirds or by a half. If you're adding by thirds, we like to do 5 pips and 5 pips in the direction that it's going when you add it. If you're adding a half, we like to add about 8, 9, 10 pips in our direction. And then on if you're adding by thirds, the second third and the third, you risk 20 pips from where you put those positions on. 15, 20, 25 pips, something like that. No more than, say, 30 pips where you put those positions on. If you're doing halves, same thing. You risk 15, 20, 25, 30 pips like that on the second half. On the first half or the first third, you can risk 50, 60, 80, 100 pips. Look at it this way: if compared to a scalp, let's say a full scalp trade, you're willing to risk 20 pips. So if you're piecing in and your first third you risk 60 pips, that's equal to 20 pips of a full scalp. If you scale in half, you can risk 40. 40 pips is equal to the 20 on a full. If you risk 60 pips on that half, that's equivalent to a 30 on a scalp. It's still acceptable. You could still come back from that. You don't want to take a full position and lose 100 pips. Tough to come back from. So anyway, that wraps it up. We will be waiting for the Fed meeting minutes to see what comes out. And possibly take some action after that. I'm sure the market's going to heat up. There should be some economic news coming out somewhere from around the world as well this evening. So that's it. So we're going to wrap it up. If any signals come out, they'll be coming your way. If you're trading now, good luck. And again, remember, FOMC meeting minutes in just under 2 hours. You got to be aware of it. Have a great day and good luck.